Hey traders, Raghee here. Welcome to Charts and Coffee for Wednesday. Happy Wednesday, everybody. All right, good to see everyone. Good morning, good morning. All right, so let's get to it. As always, type in those questions. We'll tackle them as they come in. And, the last couple episodes and also in the free videos, I've been talking about just this calendar, how chaotic it is with the FOMC, and just please be aware of where these different speakers, the different FOMC members are speaking, what that could mean to the market, what that can mean to volatility. And so these scheduled events are the easiest to prepare for. They're also the easiest to capitalize on, because when we know that they're going to happen, we know there's going to likely be some sort of reaction, and that could be the trigger for our entries oftentimes, even our follow through to targets. So I think we can use this as really the opportunity that it is many times. And of course, we also have crude oil inventory released today, and I've been in crude oil. I'm looking for maybe a day trade on that, but I'm also looking for follow through on the crude oil movement, possibly higher. I'm not looking for movement lower. So of course, remember, the first choice is anytime you're looking at a trade, do I even want to be in the market? Flat is absolutely a position. So the easiest question is, do I even want to be in this market? Do I really want to put my capital in harm's way? What justifies my making that decision? Do I have an edge to justify doing the trade? And then after and if the answer is yes, then now we can start to go with, well, what's the directional bias? Am I presuming a turnover, rollover? Am I presuming that the markets are going to go in the opposite direction, or should I stick with the continuation? And I will tell you, because we play a game of probabilities, stick with the continuation. Look for where the market could continue. Look for those opportunities to say, well, how did we get here? And what's the probability that we go absolutely in the opposite direction, or that we somehow organize after a pause and move in the direction that we were? So, that's just sort of what I'm thinking about in a lot of these situations, including the indices. So got my Jocko mug today. All right, let's get after it. All right, so first up, first question. Hey there, Tom. Good morning. XLE. Oh, perfect question. All right, XLE. Oxy is more of a laggard than SLB. So when we're talking about XLE, right, this is really a conversation about primarily Chevron and Exxon, just for everyone else out there sort of trying to understand why these individual stocks might be in play. SLB is the number 4th weighted stock, and Occidental is way down, maybe at 10th or something like that. So way down the list in terms of weighting. And even the difference between Chevron and Exxon, which sit at about 20, 22% each, Schlumberger is less than 5%. So think about the high concentration weighting. Back to Tom's question. So is Occidental a laggard compared to Schlumberger? It is. It's not one that I want to short, but it's compressing. It's sitting on the 55. The trend that preceded was up. And as a general rule, we don't want to short a quiet market. And I would say the same thing about Schlumberger. Now, none of the oil stocks are moving higher with the same swagger that they were before. So they are going to be a little bit slower. They are right now sort of waiting for crude oil to figure out what it wants to do. So we're playing the probability of continuation because the trend that preceded this compression. And this is where, if we have positions, so this is what's going to be really interesting right now. Have you position sized properly? Have you given yourself enough time? And I bring that up now because it's amazing that if a market is sitting in a range, maybe with a slight unrealized profit or a slight unrealized loss, now the whole idea of, well, am I positioned too large? Did I give myself enough time on the follow through? Hey girl, come here. Come on, lay down. Good girl. Come here. Kara, lay down. Sorry, I got the pup in here with the, can you see her? There she is. It's a tail anyways. Down, girl, down. Good girl. So, come on, down. The idea is now the weighting starts to reveal maybe some of the errors, not mistakes, but sort of errors that we might make in our own personal position sizing and time. So that's sort of a long answer, but this is where we say, well, we trust that trend is likely to continue. And then we just start to ask ourselves what maybe the impatience is as a factor of maybe not enough time to expiry, or we've just really backed the truck up in a position, and we never should do that ever. So hope that helps. And I'm waiting along with everybody else for that move. Okay, next up, EXPE. Sure. EXPE. So Expedia, it's a double green. It's sort of on the other side of this earnings relate. Kara, come here, girl. Lay down, baby girl. Lay down. Girl. Yeah, I never know if she's going to wander around to the back of the office and eat the cat food, which she has done many, many times. So Expedia is on the other side of that rocket ship that the earnings hot zone created. So I think it's viable on the dip. I do. And this would be technically a dip because, well, technically we're green over green, 8, 13, 21, 34 in play. So a dip is viable. A dip is viable on that one, Kevin. All right, Tesla. I've been getting a lot of questions about Tesla. So is it setting up a bottom? Ron, I believe it already has. So I'm with you on that. And the way that I would say that is, well, a couple things. First of all, did we have bearish momentum into the wave? That was yesterday. And actually, that was here as well. I know that day ended up higher, but at some point we had bearish Momo into the support of the wave. And as soon as we cross into, now remember, to get into the wave, we need to sell off. And in that bearish momentum of selling off, we're able to, even for a brief period of time, try to capitalize on the momentum and scoop up those call options, what would be at a better price. And so we've had two opportunities. One was on the 10th. The other was yesterday, November 15. So now moving back up, I think it already has. I think starting on the 10th, it put in that bottom. It retested it yesterday, and now we're moving out. Now, I want to make it really clear. We're no longer in the zone. So if I think about this is the way I think about it. I think about every entry as a pitch. And just because the pitcher threw a pitch and it's somewhere vaguely over the plate doesn't mean that I have a pitch that I like, right? And so I always use this analogy. I have a very specific zone where I know my probability is far higher. So we've left that. So I want to make sure that's clear. But the setup was there, and I think the bottom is potentially put in. All right, next up, is the crude oil play still valid? In a word, Benny, yes. Stephen asks, Google, sure. Google's part of that XLC ETF, and Google has been a relative outperformer compared to some of the other names within the communications ETF. This is double green, and it has been since November 4. So as long as it's double green, we have the opportunity to buy the dip. The dip that I would say you want to start off, right? If I'm looking at a dip and I recognize that there are a series of green dots on my chart, that is the sort of self-correcting, sort of smart EMA, otherwise known as simpler propulsion. And by the way, you can, whether you're a member or not, you can go grab the simpler propulsion tool over at countdowntrader.com. Countdowntrader.com, and there's a number of downloads there, and I would highly If that's a tool you want to use, I would highly recommend checking that out, downloading it, and you can put it on your charts and check out the way in which, the way I've got it set up is that the 8 exponential moving average is going to cross to 21, but it's not just it. It's sort of the secret sauce, sort of the magic is the way in which price interacts with the moving averages. So it basically becomes, the way I look at it, is a self-correcting or smart EMA. Hope that helps. So Google's definitely buyable on the dips. I'm with you there. All right. Next question is, what is window dressing? In a word, window dressing is, well, most of Wall Street will say this doesn't happen. So what happens at the end of the year is that everybody looks at the positions, especially in the preceding 2 quarters, of what outperformed and what underperformed. And window dressing has a sort of superficiality that's implied, right, in the word. And so what the idea is to buy more of what's performing to the upside, and simultaneously, and this is not discussed enough, ditch a lot of what has been underperforming, so that at the end of the year, the portfolio looks really solid. Is it really solid? Chances are some of those positions that were the window dressing were added at less than ideal prices, probably near or at significant highs. By the way, when we start to see weakness 3rd, 4th week of January, sometimes not even that long, a lot of times that's the window undressing, right? So at the end of the year, there's not everybody, I guess, does this, of course, but there's tendency to have, to clean up a portfolio. That's a good euphemism. And add what's good and ditch what's not. That's window dressing. And it's emphasized at the end of the year, probably more so than any other time. But frankly, you will see a milder version of this every quarter. You will see the intense version of this at the end of the year. And that's just the way the markets have operated for, millennia. All right. Will I have a webinar explaining my mastery class? I appreciate the question. So I'd have to ask Trish. So Trish is the brains behind all things Raghee here at Simpler. She would know, and she'd be the one putting it together. I think early next year. I think maybe look out for that in February. So, soak up all the charts and coffee, take advantage of the Black Friday sales that are coming up. I always tell my traders, look, wait for some of the cool things that we offer to go on sale, because Simpler has some great sales throughout the year. Of course, like everybody else, we're going into that. So I would spend maybe this part of the rest of 2021 educating yourself, catching up on charts and coffee, definitely watching the free videos. If you're interested in one of the services that we have here, not just my mastery, but a number of masteries. We have a number of rooms. So, I just got the notification. All right, and should be the end of February. So end of February. So what you can do between now and then, soak all this information up, take advantage of classes, and then come February, we can hit the ground running. And yeah, we will have a webinar explaining the mastery, but how I trade in the mastery. And so RRD, I will tell you that the mastery is a mixture of, for example, in 6 minutes, I'm going to jump into our weekly Q&A over at the Sector Secrets Mastery, and we're going to basically day trade for at least the first hour and a half. But at the same time, we're going to be looking at longer term time frames so we can find more trades that are on the end of day time frame. So I'm really a fan of traders being fluent in short intervals and long intervals. That's the way, Trish and I have constructed what this mastery is, to really reflect really the 2 different things that I do. I like to day trade and I like to trade overnight, but it doesn't have to be separate. You just have to segment your day in such a way, and you can, that you're spending a certain amount of time doing one type of trading, and then you're spending a certain amount of time doing the other. So I hope that helps. Next up, what am I looking at now today in Crude oil inventories and how will I be playing it? So Crude Inventories, I never want to, oops, how did I do that? Don't want to do that. That's way too much Raghee. How did I do that? Welcome to my office, by the way. Let's see. No. There we go. Oh, I can do that too? Ooh, that's awesome. Okay. A little bit more chart y'all can take advantage of. Oh, that's pretty cool. All right. Oh, yeah. Huh. Okay. I'll stop playing around with this now. Anyway, what I'm looking to do with crude oil inventories. First of all, I'd rather be long, but there's two things that are going on in my mind. Can I buy the 55 propulsion and the Darvis? That's the first thing. And that would be a fade buy in the direction of the directional bias. The other thing is going down to a 5-minute time frame and using my HPMRs, which, by the way, we have running on Thinkorswim, and big thanks to the Lorna bot out there. I know there's a lot of Lorna fans in Simpler. One of our Lorna bot, what's your title? I mean, other than the fact that you're a bot and not really human, there are our moderator helper outers. Yeah. But really grateful for the folks that are supporting us traders on the mic while you all have questions. So Lorna was a big help in getting this on TOS and on TradingView. So we have it on TradingView now too, which I'm super excited about. And ultimately, moderate. Not just that she just told me I'm just a moderator. You're not just a anything. Right. Okay. So the idea is that at 10:30 Eastern, there's going to be a volatility event. We're going to have a move higher sharply or lower sharply, presumably. And if it reaches the upper or lower end of my HPMR, which stands for hourly price movement range, I know many of you in the futures room and in the mastery know what this is. For those of you that don't, somebody nudge me tomorrow and I'll show you what it is. It just uses volatility in such a way that you're able to understand and track. What you're able to do is track. There's sort of a normal rhythm when it comes to volume and fairly predictable rhythm of where a market could go. And if it gets there, well, that's exactly as if the pitch is going over the plate, but using volatility as a measurement. And that's what I'll be doing at basically 10:31 if we reach one of those areas. I hope that helps. And I call that first come, first serve. And I think we've done a couple first come, first serve free videos in the past. So if you want to get a feel for what that is, and if we get one today, I'll see if I can't make that the free video if we get that set up today. Can I describe why the Euro US has made such big moves in the last 10 days? So Mark, thank you for bringing up currencies. I love trading money from money. When I'm looking at the Euro, and I'm guessing you know this because you're asking a great question. You're asking it in the Forex format. You know then, and for everybody else, the relationship the Euro has against the dollar is a strictly nearly 90+% inverse or negative correlation. While one zigs, the other zags, right? They move in opposite directions, but with really crisp respect for each other. Meaning if the dollar is moving higher, the euro's heading lower. And we've had, if you look at the economic calendar, what you'll notice is that we've seen a lot of ECB head poobah Christine Lagarde. We've actually had a lot of FOMC speak too. Any hot zone that's going to affect the volatility of the euro is going to affect the dollar, and the dollar is going to affect the euro. We've had a lot of that. But let's not separate those hot zones from the trend here. The trend is just resumed. And not just the trend in the euro, but the trend in the dollar. So if you've been following along in the free videos and you've been watching them for probably the last 3 or 4 weeks, we've been coming back to this topic of the dollar where I'm saying, please, please, please don't short the dollar, regardless of the chatter that's out there. Look for the continuation. And this red grab candle That was Christine Lagarde. And that was our opportunity to buy UUP at, I believe it was about 29, 30 cents. Yeah, 29 bucks, 29, 30 cents per option. And at this point, I think we're somewhere around 70. Where were we yesterday? About 79. We should be a little bit maybe higher today. So we're closing in on almost 3x on those options. This is the UUP calls that we traded. And so, yeah, we've been wanting to take advantage of this movement because, again, let's go back to what I always talk about. Don't presume a reversal, please. We're north of the 200 propulsion. Let's look for that continuation. All right. All right. So I'm going to head on over into the Sector Secrets Mastery. Thank you as always, Sakar. Thank you for your kind words. And, again, none of this happens. I don't do it all. Huge thanks to Lorna. Huge thanks to Trish. Huge thanks to the team back at Simpler HQ. And Michael, I agree. Lorna is awesome. See, Lorna? You got the fan club. All right, gang. I'll see you all same time, same station. Get those questions in early. I go right down the line. Thank you as always for your time. And I'll see you all in the next episode. All right. So this is one of my favorite mugs. All right, let's go get after it.